The Fed has released Jay Powell's initial preliminary testimony to the House Financial Services Committee, and there's nothing really new in it. It basically repeats his statement from last week's post-meeting news conference. He pushes back against the idea of imminent rate cuts, although he doesn't mention him by name. He says the timing of the cuts will likely depend on what Donald Trump does. Policy changes continue to evolve, Powell says in his statement, and their effects on the economy remain uncertain. Increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. He says the best way to avoid that outcome is to know how long the tariffs will last, the size of the tariffs, and ultimately keeping long-term inflation expectations contained. And he goes on to say, for the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance. It sounds like he is standing against the Waller and Bowman view expressed over the last couple of days. The final notes from Powell I would mention is he says the economy remains solid. Uncertainty is elevated because of tariffs. Tariffs are pushing up inflation expectations, and the labor market is broadly imbalanced. And he says of the dual mandate, keeping inflation in check is probably the more important goal. They'll balance their maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. So it is not going to break a lot of ground, but we'll see what happens when the Q&A comes up. Obviously, Bowman and Waller's comments about a July rate cut will certainly get at least Republicans' attention up on Capitol Hill.